If you think billionaires are rich because they work harder than you've already been misled, because the real wealth formula they use is almost never explained in public, and it has nothing to do with working more hours or saving small amounts every month. Two people can wake up at the same time, use the same internet, and live in the same economy, yet one stays stuck while the other builds unstoppable wealth, and the difference is a hidden formula based on leverage, ownership, and scalable systems. In the next few minutes, I am going to break down that exact formula in simple terms so you can see how wealth is actually engineered at the highest level, not by hustle alone, but by design. Most people are taught a dangerous financial rule from childhood: sell your time to earn money, go to school, get skills, get a job, work more hours, earn more pay. The problem is simple: time is limited. No matter how talented or hardworking you are, your day still has only 24 hours. That automatically puts a ceiling on your income. Billionaires understand this early and escape the time for money trap as fast as possible. Instead of asking how can I earn more per hour, they ask how can this work without my hour. They build or acquire assets, things that produce income repeatedly without constant presence. Assets can be businesses, equity, software, media channels, intellectual property, or investments that generate cash flow. The shift is from active income to asset income. Think of it this way: a worker gets paid once per effort, but an asset owner gets paid again and again from one effort. A video can pay for years. A product can sell thousands of times. A platform can serve millions. Wealth begins the moment your income is no longer directly tied to your clock. That's the first hidden rule of the wealth formula. Leverage is the force multiplier of wealth, and billionaires rely on it heavily. Leverage means using something outside your personal effort to multiply results. There are four major types: money leverage, people leverage, technology leverage, and media leverage. Money leverage is when capital is used to produce more capital through investments and acquisitions. People leverage is when teams and talent expand output beyond what one person can do. Technology leverage is the most powerful today. Software, automation, and platforms can serve millions at near zero extra cost. Media leverage allows one message to reach massive audiences instantly. The average person tries to grow by adding more effort. The wealthy grow by adding leverage. One worker with no leverage can only produce 1 unit of output at a time. One leveraged system can produce thousands simultaneously. That's why a small startup with the right technology can outperform giant traditional companies. Billionaires don't scale effort, they scale systems. They design once and distribute endlessly. If you want exponential wealth, leverage must become your main strategy, not just hard work. Chapter 3: Ownership beats income. High income does not automatically create wealth. Ownership does. This is one of the most misunderstood truths in finance. A person earning a large salary is still dependent on a paycheck. If the job stops, the income stops. Owners, on the other hand, hold stakes in assets that grow in value over time. Billionaires focus obsessively on ownership, shares, equity, royalties, and controlling interests. When a company grows, owners benefit from the full upside, not just a fixed payment. Employees trade contribution for compensation. Owners trade risk for unlimited upside. That's why founders, early investors, and equity holders often become far richer than highly paid executives. Ownership also allows compounding to work at full power. When value grows and you own part of that value, your net worth multiplies without additional labor. Even small ownership stakes in scalable businesses can outperform years of salary. The wealthy ask, "What part of this do I own?" before they ask, "How much does this pay?" That single question changes financial destiny because wealth is built on equity growth, not just earned income. Billionaires don't chase safe, equal risk opportunities. They look for asymmetric opportunities where the downside is limited but the upside is massive. This is called asymmetric risk-reward. Instead of risking a lot to gain a little, they risk a little to potentially gain a lot. For example, investing small amounts into multiple high-growth ideas, startups, or innovations where one winner can return 50x or 100x. Average earners are trained to avoid risk completely, but total risk avoidance also avoids extraordinary reward. The wealthy manage risk. They don't eliminate it. They spread bets, test fast, and keep losses small while leaving room for huge wins. This creates a portfolio effect where a few big successes outweigh many small failures. This mindset removes fear of trying because each attempt is structured intelligently. It's not gambling, it's calculated asymmetry. They measure opportunities by upside potential. not comfort level. When you start evaluating decisions based on limited downside and explosive upside, your strategy shifts from protection mode to growth mode, and that S where real wealth acceleration begins. Hustle can create income, but only systems create lasting wealth. Hustle depends on constant human effort. When you stop, results slow down. Systems continue producing even when you are not directly involved. Billionaires focus on building repeatable, automated, and scalable systems that generate predictable output. These include subscription businesses, automated sales funnels, distribution networks, licensing models, and recurring revenue structures. A system turns one success into a repeatable process. Instead of chasing each new dollar, the system is designed to attract dollars continuously. Hustlers ask, "What should I do next?" System builders ask, "What should run next?" This is a massive mental shift. With systems, decisions are made once and executed many times. That multiplies effectiveness and reduces dependency on daily motivation. Technology now makes system building easier than ever. Automation, digital platforms, and global distribution remove traditional barriers. The wealthy don't just work hard, they engineer environments where results happen repeatedly. When your income is driven by systems instead of bursts of effort, wealth stops being temporary and starts becoming structural. Now you understand the wealth formula that almost nobody explains clearly. Wealth is not built by working more hours, chasing bigger salaries, or waiting for the perfect opportunity. It's built by shifting from time to assets, from effort to leverage, from income to ownership, from safe moves to asymmetric bets, and from hustle to systems. This is not theory, this is the repeatable structure behind nearly every large fortune. The difference between stuck and wealthy is not intelligence or luck, it's strategy and design. Start small if you must, but start correctly. Build something that can grow without your constant presence. Own a piece of what you build, use leverage wherever possible, and think in scalable systems, not daily tasks. Don't just consume this idea, apply one part of the formula immediately, because the moment you change how you build money, you change how money builds for you. If this opened your perspective, rewatch it, take notes, and begin executing, because formulas only work when they are used.